All right, good afternoon, guys. This is Thinkorswim with Trade with Tex. I figured I'd make a quick video here about pivot points, as you know, a lot of our YouTube subscribers really took to the Fibonacci videos, and I got plenty of positive feedback that it helped your trading. So, pivot points are also a pretty key form of technical analysis in terms of key levels. So we're just going to jump right into it. Okay. Pivot points are pretty commonly used, actually, especially for short-term traders. They were initially used by floor traders. That's kind of how they came to life. And they also have a lot of variations that work for different people. For me, I just use the common pivot points. We're going to break down how they work, how you can use them. Really, they work as any other support and resistance levels, right? They work as potential targets where you can use to measure risk and reward. And also, they can help you with your entry and exit points, right? You can actually buy and sell off of those key levels pretty frequently, okay? So there were a couple of examples today, and I want to show you just exactly what this looks like intraday before we actually get into how to set them up, how to add them to your chart, and then how to read them, okay? So basic example here, this is Amazon today on the 5-minute chart. We're currently in the TD Thinkorswim platform. It's a free platform and it's pretty commonly used, so I like to use it for the videos. We're on the 5-minute time frame, which is essentially the 5-day 5-minute time frame. And when we're referring to a time frame, obviously we are always referring to the interval. So you can see we are on the 5-minute, meaning that each candlestick here represents 5 minutes of a trading period. Okay. And it is actually important here to have the 5-day up because a lot of times if you use the 1-day 5-minute or any much larger time frame, not interval if that stays the same, then you'll get pretty weird numbers for your pivots. You're not going to get the exact ones that you need because, which I'll explain shortly. The calculations for pivot points are made from the prior day's data. So you need this number here to be greater than 1 day. Okay, and this is a default time frame in Thinkorswim, so it should already be set up for you there on the scroll down list. All right, so we're on the 5-day 5-minute, and you can see Amazon opened up with some pretty crazy action today, right? On November 27th, we had a big pop, and then, as you see from large caps commonly, a big drop at the opening bell, and it came down to this pivot point, which is acting as a support or resistance level, depending on where the stock is trading. In this case, support, since it's above it. It came down to this pivot point and got a pretty aggressive bounce back. And you can see this is just a perfect example of how pivots work. It went all the way from 1558, which is where that pivot point was at, all the way back up to 1593. And not every single setup is as clean as this, but usually when you have high volume for a stock, so first 30 minutes, first couple of hours, you're going to get these clean setups. And this is a perfect example of a stock that we were looking for a dip buy on, and we nailed that dip buy right off of the mid pivot. I think we ended up getting in some Amazon calls, pretty expensive since the markets are volatile, for about 25 bucks, and then we sold them up closer to 40. Okay, so that is a 40-point move. That paid off pretty nicely early on. And again, this is just a large cap example. Pivot points, like the majority of our technicals at Trade with Tex, can be applied to anything. So this works especially well with futures, right? Natural gas, crude oil, the S&P 500. It works very well with large caps, anything with high volume, really. And it does work with penny stocks as well. So penny stocks, again, you do need some high volume there in order for these trades to work out. So it's a little bit more situational, but we use them for pennies almost daily. Okay, so let's get into how they work and exactly how to throw them on your chart. This is just a basic example of a bounce play, right? Pivot points are exactly what you would guess they are in Thinkorswim. Under your studies, when you're adding something into your chart, let's remove everything real quick so you can see how this works. I removed all the studies just by going to studies and remove all. Now I got nothing on here. And if I want to add something, the go-to thing that I see a lot of people do is they go to add study. That's too much for me. That's kind of overwhelming. I just go to edit studies, and then I click in this little search bar here on the left-hand side, and I just type in pivot points. Okay, and it's the second one down on the list. You can already see that there are 4 different variations, and that's just what's popping up here, right? There are 4 different variations, you know, because they're commonly used and people put their own spin on them. So we're just going to double click pivot points. You can see it throws it on the right side here. And before you actually add it to your chart, right, this is what it looks like by default, just so you can see it in the background here. Right, this is what it looks like by default. If you're okay with these circle dotted lines, right, that's fine. I personally don't like them, so if you click settings, this little settings cog, you can customize it a little bit, right? We'll go over what all of this means shortly, but essentially these are the different lines, right? R3, R2, R1, those are resistance levels, so those are the ones that are overhead. Pivot point, I refer to it as the mid pivot. So kind of take that note down or put it in the back of your head that for the remainder of this webinar, I'm going to be referring to the pivot point as the mid pivot. Because to me, right, all of these are pivot points. So if I'm referring to R1, I'm going to call it the R1 pivot. If I'm referring to the pivot point, I'm just going to call it the mid pivot because it's in the middle. And then S1, S2, S3 are support 1, support 2, supporting 3 pivots. Okay, so you can see it gives you a total of 7 levels here by default. What you have to do in order to change the line, right, if you don't like that dotted line, which again I'm not a huge fan of, you have to go to style and set it to whatever you want. But here's the catch, it's going to automatically draw it as those circles. So you need to go to value numerical. So if I want them as a straight line, right, I go value numerical, and I'll do that real quick for these. And if you need to make them thicker or whatever, you can change the width, color. To me, it's easier, guys, to just leave the colors as it is because red is usually resistance, support is usually green on my chart anyways. So it's easier to keep them like that. And then the mid pivot's in purple. Okay, so apply this to the chart and you can see that they're straight lines now, right? They're a lot cleaner, easier to read than those dots. Okay, so this is the exact example that we had on Amazon earlier. Here's the mid pivot support. There's the R1 pivot resistance. And that's essentially how this is set up for every single stock. If I fit my studies to my chart, see how I can zoom this out by double clicking, and we automatically see the mid pivot, S1, S2, right? That's because the other pivots are too far apart, right? They're fairly far apart. And this is something that is actually great for those of you that look for better risk to reward trades, right? Obviously, everybody's looking for a home run, but for those of you who are just looking to grind and continue to nail the same risk to reward trades over and over as you should be, all right, trying to make a career out of day trading, these are great because when a stock gets more range the day before, the pivots are going to be more spread apart, meaning that you have more room until the next key level. So for example, right, Amazon had a pretty big day yesterday, pretty big range from 1525 to 1585, about 60 points, which is bigger than the average range that it gets. It usually gets about 25-30. So if we look at this, right, you could see that the pivots are real distance. So when I take that bounce play, instead of just having the mid pivot down here and the first R1 pivot right here, right, they're more spread apart because pivot points take the prior day's data. Personally, what we're talking about here are intraday pivots. So they're taking the prior day's data. You can use pivot points on much larger time frames, but we're not going to get into that, right? You can get a year's pivot or a month's pivot using the prior months or year's data. Okay, but again, for now, we're just sticking to these. So the way this works actually, and I'm just going to make it super brief before we get into how to use these, right? So we know how to put them on our chart now. And again, if I ran through that too fast, just pause it, rewind. That's what the video's for, right? We know this is using the prior day's data, but really you need to know how. And for me, I'm a math guy, right? I like to go into it and understand the inner workings behind every single one of these indicators and overlays. So, you know, the MACD, a lot of people just think it's two lines crossing, but in reality, it measures the convergence and divergence of moving averages, right? Basic moving averages, some people still don't even know how those work, and they're such an integral part of our trading. But pivot points are actually kind of simple. The math looks complicated, but I'm just going to pull this up on the screen very quickly. This is just a little sticky note that I made for anybody that wants to pause the video and type this up or save it. This is how pivot points are calculated. So as you can see, really what they're taking into account is the high, low, and the close. So to give you an idea, this purple line, this mid pivot here, is just using the prior day's high, right, plus the low, plus the close, divided by 3 to get an average price. And that's how it narrows down the mid pivot. Okay, kind of similar to the calculation of the VWAP, right? You guys are probably familiar with that. On top of that, you can see that the S1 and S2, support 1 and support 2, are calculated in a very similar manner as resistance 1 and resistance 2. It's just using the mid pivot, the high, and the low for each one. So we're not going to get too far into that. Again, if you want to understand the math behind it to kind of get a better idea of whether or not a stock is showing relative strength or how it's performing or where its key levels are, then you can break down the math. But for me, this kind of helped it make sense, right? Just understanding that it was taking averages of the high, low, and the close from the prior day. So if you get a big day, right? Today, Amazon's range was kind of tight. Pivots are going to be tighter tomorrow. Okay, the prior day, yesterday, the range was pretty large. So high, low, close. We're going to get much larger and distanced pivots today, giving us a lot more bang for our buck when we trade it. All right. Now, you can see that the use of them is actually pretty simple. But there's one thing I'll say. The mid pivot is going to be your best friend. That purple line is going to be your best friend. That's really the big inflection point here. And it's just kind of like the VWAP. A lot of people just use the middle VWAP line or just the standard VWAP line. If you haven't heard of that, we do have a video on that as well. Or you can just post in the comments and ask a question about a VWAP if you do need to. But the middle VWAP is really the only one that's commonly used. That's very similar for the pivots here. The mid pivot or the pivot point is your big reversal zone. So those of you who like trading intraday reversals, bounce plays, or just short plays in general, that's going to be your best buddy here. Okay. And we do have a webinar on reversals as well, but I will say a very simple way of reading them is just whether or not we're getting a sharp reaction to the key level, an aggressive reaction, and if it's accompanied by volume. So if we just add volume to this chart, and I'll show you what my pivot point study set looks like too. So you can see this as well. So I save it. If you guys have set this up by just going edit studies, pivot points, right, and doing the customization that we talked about, I save it under save study set, and I would call it pivot points if you have the time to do that now. And then when I go to load it, I'll go to pivots only. That's the study set that I have for it. So you can see that I prefer the dotted lines, but lines nonetheless. And if we zoom it on in, right, this bounce on Amazon accompanied by a lot of volume. And on top of that, a pretty aggressive bounce. It was almost instantaneous. Okay. And if we go read the reaction to the resistance, right, you can see again, very ugly candlestick on high relative volume. So just look at the volume, right? You can see how these key levels factor in. If you just use volume and pivots alone, really simple trading, you don't need to overcomplicate it. Look at how this works out, right? Look at the two biggest volume periods. Opening bell, right? First 15 minutes, since we're on the 5-minute chart, 3 volume bars is 15 minutes, okay? We have a very, very aggressive 15 minutes on high volume. And then right here, we have 10 minutes of big concentrated volume, and that was right here. Okay, and that's a result of everybody selling at that pivot point. Okay, and look at the difference here, guys. Look at the difference. Really common strategy is shorting on a lack of follow through when people short sell, or buying on a double bottom, right? Shorting a double top, buying a double bottom. Super common technical strategy. And if you were looking at Amazon without these pivot points, and you said, okay, this is the high for the day, I'm looking for a double top. See how it head faked above it? Clearly, right? For 10 minutes versus the test of the pivot point here, an immediate rejection. So if you have this factored in with your key levels, it goes a real long way in terms of taking profits, but also potentially playing the other side of it. Okay, so the simple factors of volume and key levels there, giving you multiple setups using pivot points. Now let's use a stock that's a little bit smaller here, right? Okay, stock that's a little bit smaller. Let's go to PCG, not the smallest stock, but still lower priced. This is a stock that's been, a pretty big name lately because of the campfire, right? That big wildfire that's spreading all over and taking a lot of homes and lives with it, unfortunately. But PCG was the company that started that. Now it doesn't seem like they're going to get into a whole lot of trouble with it. The stock is incredibly undervalued right now because it sold off so aggressively. Everybody was thinking, this thing's going to go bankrupt again. They're not going to be able to make it out of the lawsuits alive, but the company's doing fine. So it's an undervalued stock. It has a book value, really just a real value of about $36 per share. Clearly at 25, that's a steal. So we're just looking to play it on the buy side, right? We're just looking to buy some shares on weakness and sell into strength. Pivots making that real easy for us, right? Look at the opening bell here for PCG. This was a textbook setup. It started dropping at the opening bell, shaking out all the weak hands, all the rookie traders. As I like to call them, the Stevie Wonder traders. They're blind. They got no idea what's going on. But those of you that have these indicators added to your chart have a much better idea. You can see right here we get a reversal candle off of our good old friend, the mid pivot. All right, this purple line. And immediately, right, again, it's an instantaneous move if you're right here, right? If you're watching it closely. Immediately, a huge move on relative volume, and you can see that volume increase all the way up to the R1 pivot. Very simple setup. You don't need to get cocky and wait for R2 and R3 and try to ride it to the moon. It's a super standard setup, and in this case, right, you played it from 25 bucks. Let's just say you're not the best trader. You got in at 25.2. Okay. And then you wrote it up to 26.69. Again, let's say you're not the best trader. You got out at 26.5. That's still $1.30 per share net gain. And I'm not really here to show you what pivots could do for you. I'm here to show you how to apply it. So as you can see, right, the mid pivot is your big reversal zone. Take the bounce off of it and you play it to the first resistance level. No, hey, maybe I should let this ride. Hey, maybe I should take this thing to the moon. Take your profits, get out, wait for another setup. Okay, super common strategy with penny stocks too. Again, the mid pivot bounce it just works wonders. Okay, and it works the same way. Not every stock gaps up and opens up above its mid pivot. A lot of times you'll see stocks open up below it. And 9 times out of 10 when that happens, it's not a good sign, right? It's going to take a lot of buying pressure to get back above that level. Okay, so we used 2 examples so far, right? We used Amazon, pretty big large cap. Again, a high volume stock. That's really what we're focused on here. You need, for technicals to play out, you need volume, bottom line. Okay, Amazon, high volume stock, clearly one of the most popular ones out there. PCG, high volume stock, and it's a hot stock right now, right? It's not this exciting. Okay, it's a hot stock. You had to scan to find it. And then the last one I want to mention is just the S&P. Now, /ES in TD Ameritrade Thinkorswim are the futures, right? Essentially just looking at the index price of the S&P 500. The more commonly used ETF and just ticker in general is SPY. Everybody uses SPY and SPX, but I'm going to show you futures because personally that's what I trade, and I don't really deviate from my game plan. And as you can see, the S&P /ES, to look at the SPY, early on today, this is the opening bell. And easily one could argue that the S&P 500 is one of the most difficult things to trade every day because they're the most head fakes. We get a presidential tweet out and everything goes to hell. So it's really, flip-floppy. It's all over the place. But as you can see for the S&P, we opened up right here, 930, ding, ding, ding. Dropped down, big reversal candle off of its mid-pivot, which had already bounced it at 8:30 a.m., mind you. Big reversal candle here off the mid-pivot, and it ran up all the way to 26.78. Notice, guys, that the next pivot did end up getting hit. Right, the next pivot did end up getting hit. But you also have to be realistic with yourself here. You know, looking at the S&P on any given day and say, I'm going to nail a 1% bounce. That's pretty tough. For me, the way I would play this, I was playing Amazon. I did not see the S&P set up this morning. This is a hindsight trade here. I saw PCG set up and I saw Amazon, but I was too focused on them to trade something else. I personally can't trade 3 things at once. It's way too much for me. But on this setup, you can see that this pivot was very, very far away from the mid pivot. The S&P's typical daily range is smaller than the distance between these two pivots. So you do have to take it with a grain of salt. You do have to use some kind of realism here and realize that, hey, it might not go pivot to pivot, but I can still get enough reward and a good enough risk to reward to use this mid pivot as a bounce point or as a short sell, right? If we were to lose that. Okay, so again, we went over 3 examples here: Amazon, PCG, and the S&P. It does work with virtually any stock. And you know, the bottom line, pivot points are great to add to, you know, your overall artillery for indicators. And you know, if you need key levels on your chart, if you need to read risk to reward, these are perfect. Okay, but make sure again that you have it on the 5-day 5-minute. If you use the 10-minute or the 3-minute or the 15-minute, whatever, it works. But make sure that you're using more than 1 day. Right, we're talking about the 5-day 5-minute. If you use the, you know, intraday 10-minute or whatever, just make sure that this is more than 1 day, and this can be whatever you want it to be. Right, once you pass the 1 year 1 day time frame, then the pivots have a different calculation. Right, they use the prior month's data. Okay, but for the time being, this is the prior day's data. This is the math that goes into it. Okay, if you need to pause that or go back and watch that. And hopefully I made it pretty simple to add it to your chart. Okay, if you do have any questions, if you use another platform, again, pivot points are in every platform. I've used probably 7 or 8 trading platforms. I've never not seen them. They're everywhere. Okay, they're very commonly used. So just go into your study sets, add pivot points to it, keep it nice and simple, and use that customization if you need to. Hit OK, apply, OK, and they should be up there. And you should be good to go. Okay, if you guys have any questions about them, feel free to throw them in the comments below. And for anybody that really wants to further their technical analysis and take it to the next level, we do have a membership. It's very, very cheap. And we also offer a week trial for it. So it's $50 a month. We offer a week trial and you get everything, right? We won't just teach you one indicator. We have 2 weekly webinars, nonstop alerts, nonstop charts, screen share audio, all that good stuff, right? But this is a very simple form of one of our webinars for any new guys that are looking to add a new indicator to their chart. Okay, so good luck out there, guys. Green screens to you, and I will see you in the next video.